Hey, it's Michael Saul with the Stock Market Trading Watch List for Monday, October 10th, 2011. SPY video up on the blog, but I wanted to show this rather than the S&P cash, which we'll look at in a second. But you can see we popped up off the job numbers and then put our highs in. We actually put our highs in the pre-market, and then from there we sold off most of the day here and got a little bit of a bounce. You can check the 5-minute chart out. I mean, I do this on the SPY video, but I'll show it here anyway. Got a little bit of a bounce here. It looked like, hey, maybe we're going to go back, but then no, we rolled over. So on the daily chart, we'll go to the S&P 500 cash. We're still below the 50-day moving average. Still haven't tested it yet. This is 3 up days in a bear market followed by a down day. Volume here looks like it pulled in a little bit, but actually was a little bit higher. So what I'm looking for across the major indexes is I'm looking for a dip that holds this low, and then I'm looking for what is known as a follow-through day. Now, the dip doesn't have to precede the follow-through day. That's just what I'm looking for, okay? So the follow-through day would get me turned around and back on the upside. If you want to read about the follow-through day, I did an article on it at www.stockmarkettrendsx.com. Okay, here it is. Format text. There you go. Okay, so stockmarkettrendsx.com. You could go there. That's the site that has the educational articles, and you can also join my mailing list there. And this is the blog too. If you want to just go there, I have a link to this over there, a link to the article. Okay, so that's what I'm looking for here. Otherwise, I'm going to continue to analyze and trade this as if it were a bear market, because we're below the 200-day moving average. Okay, the volume pattern, with the exception of maybe a few days where the volume on the upside outperformed the downside volume. I mean, it's been a bearish volume pattern. It's bearish price action. Okay, you can see just bounces that roll on over. Last follow-through day failed. That was this one. Got a little bit of a bounce, but then got undercut. Then we watched here, and nothing developed there. So now we're on watch again for it. Okay, and some people may look at this as, hey, you're looking for, you're looking to be a bottom picker. You're looking to pick a low in a bear market. And the answer is absolutely. Okay, because the follow-through day, which was invented, discovered, whatever, by William O'Neill, is a very, if you do your research on it and you do some looking back into it, not just taking my word, okay, you'll see that it's a very powerful pattern, and there's been a lot of research done on it. So it definitely gets my respect. Okay, and will it absolutely work? No, of course not. Okay, I just read from IBD themselves that they say only about 75% of the signals actually lead to a new leg higher, and about 20. That means 25% fail. But usually when they fail pretty quickly. This one, I don't know about quickly, but I mean, depending on where you're putting your stops here, I mean, I'm not singing. This isn't a video about singing the praise of the follow-through day. I'm just talking about how, if you took this one, there were opportunities here to either move your stops or manage it or whatever. But this obviously is not a big leg higher. So anyway, that's what I'm looking at going forward. Basically, the charts look a lot alike. If I can get the symbols correctly, is the NASDAQ 100. Okay, is the Russell. Okay, the Russell actually had a bearish engulfing pattern. Right, we gapped up above, and then we engulfed the whole previous day, whole body. We didn't quite get the lows by a couple of ticks, but I've heard it both ways. I've heard it say you have to engulf the whole candle or just the real body. Okay, and the Dow is going to look like the S&P. Okay, so not as bad. I guess it had a doji, and it tested the 50-day. So no, it came shy too. It came a couple of ticks shy of the 50-day moving average as well. So it looks similar to the S&P. Okay, let's look at some sectors. The semiconductors, wow, green on the session. Okay, I haven't looked at these until just now. I was focusing more on stocks. Banks, down 4%, not nice. Brokers, okay, down 3.2%, also not nice. Cyclicals, okay, they were down as well. Let's look at XLB while we're here. Okay, bios. Yeah, bios got hit 3.19%. So it all depends, right, on this pullback. Just because of a horrid day Friday or not a horrid day Friday, I want to see a pullback here. I don't know if we're gonna, and like I said, we don't need to see a pullback here. I think we're going to. I just don't know. I mean, could this be the low and we just rip higher? I mean, stranger things have happened. It's not the pattern that suggests it. This pattern actually suggests a retest of the lows. So, and as of right now, I still believe we are in a bear market here. But like I said earlier, I'm not just going to brush aside the follow-through day like it doesn't exist. Okay, here's gold. Have to change the lines here. Let's do it together. It looks more like this now. Okay, so that's a coil. Silver, a little sloppy. Oil, yeah. Nice day on a Thursday, but Friday just kind of pause days. All right, look at some big ones. Apple, okay, not looking so hot here. Down almost 2%, 1.9%. Watch, see if it can get a retest of this 200-day moving average, especially on weakness in the market. Amazon, back above the moving averages here, so one's tough to look at for a fade. Google, 20 EMA, watch that for potential resistance. Baidu, 20 EMA, 124.09. Nice power bounce off of these lows, so this was a beautiful entry on the short side. This was a beautiful power bounce move. Look at Cena. Okay, looks really crappy, down 7.34%. Yucky. Goldman, okay, down 5.34%. It's not good here. Goldman still looks like it could try to take 75. Obviously, if the brokers and the financials are headed down, it's going to be a tough market to bounce in. Here's the bank. Here's Bank of America. This isn't exactly the banking index, but it's obviously one of the biggest. It's arguable if it's JP or whatever. JP also looking terrible with a dark cloud cover. A couple of stocks that came up on my scans. First one is NLC, Nowco Holding Company. All right, 6 million shares on Friday. Usually trades about 4 million. So it's not a light stock. And this scan I just did a basic scan of stocks that didn't come close to testing the August lows on the last pullback, so showing some relative strength. And this NLC looks like a really nice looking flag here. It looks better on the weekly. All right, so watch this one to see if this one can take out the highs. 40 would be a whole round number. And then CELG is another one. CELG, okay, I drew in the purple lines here to show kind of a flag, a little wide. But then I drew this other one in to show a little mini coil right here. So obviously waiting for confirmation to see if this can break higher here. But the first target would be a test of highs, and then 71 would be the next level. Okay. Notice a decrease in volume right after the pop here. Now, granted, I'd like to see volume up around these levels, but still a nice pop above the 50-day, and then a couple of declining volume bars. So Monday is Columbus Day. It's a bank holiday and maybe light volume. So if you're going to trade, be aware of that, as the moves could be whippy. Have a great trading day. Talk to everybody again on Tuesday.